Hey friends, I'm back with another video about dividend stock investing. In today's video, I want to share with you 5 mistakes that dividend investors could make. And any one of these mistakes could completely derail the dividend stock investing strategy. It could render it useless and just make it not work for the investor at hand. And so mistake number 1 is actually taking a setback, taking an experience that is bad in the stock market and let it completely derail the investor's journey. I had a major setback in 2023. I just shared this over on Patreon with my corner patrons. I'll link to that in the pinned comment. I just shared a portfolio update with my corner patrons, percentage allocation to each position in my portfolio. And the big setback that I faced in 2023 was a real big hit on my dividend income because Hawaiian Electric, a regulated electric utility that I own, suspended the dividend. Now, Hawaiian Electric also fell in share price quite considerably, and I monitor portfolio value, and I don't like seeing that take a setback as well. Now, I could have taken this experience, this terrible setback in the stock market, and kind of allowed it to get in my mind, allowed it to really give me pause. Hey, should I even be focused on this dividend strategy? Of course, I've been at this a long time, and so I took this setback as just one of many in my journey. I got back on my feet, and I actually refocused efforts on Realty Income, ticker symbol O, and I was able to acquire a lot of units of that REIT under $50 and slightly above $50 per unit. And that has paid off handsomely. That helped get me back on track with my portfolio. And so I took a bad situation and refocused my efforts on something positive. And because of Realty Income, because of the high yield that it offers, I have been able to rebuild and push forward from that setback. Now, worth noting, my heart goes out to anyone affected by those very devastating wildfires in Lahaina, in Maui. As per the literature that Hawaiian Electric has shared with shareholders like myself, they are saying right now that they are not responsible for these wildfires. Nonetheless, they did suspend the dividend proactively to be on the defensive should they have to pay money in any way for the tragedy that happened. And of course, Wall Street is pricing in a lot of risk on that stock right now. And so Wall Street seems to disagree a bit with what the company is saying. Only time will tell how that situation pans out. But of course, my heart goes out to anyone affected by those wildfires. As of now, I am taking Hawaiian Electric's word for it that they don't appear to be responsible for those devastating wildfires. At least that's how I interpreted the literature that they shared with me. The meta level point here is it is absolutely inevitable that the investor will face setbacks on their journey towards financial independence, towards cash flow, and it's what the investor does with those setbacks. Now, check it out on the screen right now. I want to share with you just really quickly. These are some notes. When I shared my portfolio update on Patreon, I was comparing, on Corner Patreon, I was comparing December portfolio versus July portfolio. And what was interesting is my portfolio value is down 1.3%. The reason it's down is because of Hawaiian Electric, but my dividend income, it's still up 2.28%. And the reason that I was able to overcome the dividend suspension from Hawaiian Electric is by going really aggressively on Realty Income when that stock was trading really cheap. Now, worth noting, if Hawaiian Electric did not have any issues, my portfolio value would have been up by 0.5%, but dividend income, more importantly, would have been up a staggering 5.71%. Something else I want to say on this particular topic right now that I learned from this experience, this setback, because every setback to the investor should be a great lesson worth learning, is I learned that smaller companies in my portfolio, small caps like Hawaiian Electric, I'm more cautious of those going forward. They don't make as much sense in my portfolio. I don't plan on selling that, but just on a go forward basis, I'm really focused on the winner takes all style investments because we live in a winner takes all society. So that was mistake number 1 that could totally derail an investor, but the solution to that mistake is just to march forward and to realize that all of us have setbacks, myself included. I've had many setbacks over the years. Let's talk about mistake number 2. As you can see on the screen in front of you right now, the second mistake that I want to discuss today is just the fact that some investors can get bored with dividend stock investing. And by getting bored, there is a risk that comes about, and that risk is making either poor stock selections or even simply giving up because it's so boring. Now, let me take a step back. One thing that is so important for dividend stock investing, of course, is selecting the right stocks. I want to talk about this in the video later today. This is really the cornerstone of my channel. I talk a lot about fundamental analysis, about the stocks that I own, how I select great stocks, but that is a very minuscule piece of the pie in my opinion. In my opinion, that is maybe say 25% of the entire thing. The other 75% is so much more, and a lot of it revolves around persistence, determination, grit, and not giving up, not getting bored, if you will. Now, one of the reasons I love this YouTube channel is I can go back over the years and analyze myself as an investor, and I can see in real time the things I did really well, but I can also see some of the patterns and some of the mistakes I've made as well as an investor. It's a great tool I use for myself to learn more as an investor. And if you've been on this channel for a long time, since the early days, since the Thug Life days, please don't forget to click that like button and share in the comments below. I'd love to hear from you. By the way, I want to share a very warm Merry Christmas, Happy Holidays, Happy New Year with all of you out there all around the world. I love you all. And so what I want to share, though, is it's funny, when I started this channel in the early days, I had a lot of good stock picks, and I was sharing them on this channel, and I just had pick after pick after pick that were doing really well. I was buying stocks like ABBV at the lows. I was buying stocks like General Mills at the lows, Southern Company at the lows, Starbucks during the depths of the pandemic even, when it was trading on sale. But some of you might have even noticed that over the years, my portfolio got bigger and bigger. Eventually, I've now trimmed it back down. I'm at 37 positions right now. My 37th position is the ETF SCHD. That gives me the diversification. I'm going for it through an ETF now versus having like 50 plus stocks. But what I noticed over the years is some of the incremental companies that I added, because maybe I was getting bored or I was just collecting stocks, they just weren't as kind of successful for me as an investor. I had stocks like PPL, which I now sold. I had stock 3M, which I've now sold, although I actually like 3M still. Maybe one day I'll buy it back. That was really sold for not only cleaning up the portfolio, but I had a higher and better use for that capital at that time. I even bought a stock. Now, this is a fraction of a percent of my portfolio, Utz Brands Inc., and I love Utz. I still own it, but it has had lackluster results so far as compared to a more successful stock I own like PepsiCo. When I look over the years at that, I can see in retrospect, perhaps I was getting a little bored. I was adding too many positions. I was trying to jazz it up through stock picking. But what I realized is, Ian, you really shouldn't have been focusing so much time on stock picking. That's really only at most 25% of the entire equation. You should have been focused on that other 75%, which is not getting bored, having grit, having determination, just staying focused on doing it. It's having that willpower, and that's the hardest part of dividend investing. I think it's a mistake a lot of us can fall into. At least I've experienced that mistake, is just, I would say, diversifying, getting too focused on the stock picking, having too many stocks. Now, worth noting, of course, in the early days of my channel, when I was picking a lot of really successful stocks like ABBV, General Mills, so on and so forth, the stock market was in a very favorable place. And so I also had benefit there of just, hey, probably throwing darts at a board back then. It was easier to pick really good stocks versus the latter days of the channel, when I did pick some stocks that didn't turn out quite as well for me, like PPL Corporation, for example. Well, it wasn't as good of a time for the market in general, and so I have to give myself some grace as well and understand that that's part of the equation as well. But what I would say, that's a tangent to this mistake, but it's a lesson, because every mistake has lessons, is that I've kind of concluded that you can go about dividend stock investing with individual stocks. You can go about it with ETFs. You can do it with both. You can do it with mutual funds. There is no one right way, and I'm starting to realize, in the early days, I felt pretty confident that it would be easy to beat the stock market, to beat the indices, the averages. Now in these days, especially with all the wacky things going on in our world, lots of unpredictable events and terrible events, I'm starting to realize that a very diversified ETF approach, there is nothing wrong with that, and I'm incorporating that into my strategy right now. And so the big takeaway from mistake number 2 that investors could make is just going after too many stocks, getting bored, maybe even giving up completely. It's so important to stay focused and to have that determination and just not to get bored. And so that's that. Let's go on to mistake number 3 that could completely derail a dividend stock investor. As you can see on the screen in front of you right now, I want to share with you that so many investors are fearful during down markets. They're really, really fearful, and they end up selling, they end up buying high, they end up selling low. But let me tell you, bear markets, that is where the money is made. I think a great example for me, at least, is during the last bear market, which was during the pandemic era. I was buying Starbucks, and I was buying that stock in like the $50 range or something, 50s and 60s, and it was really low because people thought, the media thought, Starbucks would never open again. Of course, that did not pan out that way. Starbucks is open again. They're a thriving business. They're doing really well, and the stock has recovered. And so I was being greedy when others were being fearful. Now, worth noting, at that same time, I was buying 3M as well on those down days. And that one did not pan out as well for me, of course. I ended up selling. Again, I'd probably still hold it to this day, but I needed the capital for a higher and better use. Maybe I'll buy it back at some point. But I wasn't really selling because of anything wrong necessarily with the company. It was more that out of the stocks I own, I had to pick my least favorite, which that one at that time fell in that bucket. But it was interesting because I had these 2 stocks I was buying really heavily. I had others during that time. During the pandemic, I went crazy in the Home Depot and got it at like half the price it's trading at now. It was incredible how cheap it was back then. But anyway, the point is that even during a down market, it's possible to select stocks that don't recover or don't recover as well as others. And I think that's yet another lesson to diversify and to not have one's eggs all in one basket. But in terms of bear markets or down markets, I have a few rules I want to share. As you can see on the screen in front of you right now, the rules I want to share are just avoid buying high and selling low. In fact, I've bought high many times, but I try to avoid selling altogether. I buy and hold forever. At a minimum, during a bear market, I like to hold strong. Even better, I try to buy quality during bear markets if I can. I want to have the discipline also, though, to take it easy when stocks are expensive. Right now in late December of 2023, stocks are expensive now. And so I've already shared this with my patrons because I share with all my patrons the trades that I make, and my trades have been slowing down. They've been slowing down because the market is a little bit more expensive. That being said, let me say, when I compare my stock portfolio from December versus July, one of the reasons I haven't seen as much traction on equity appreciation, it's not only the setback on Hawaiian Electric, because I shared with you the numbers. Even if it hadn't plummeted, the portfolio didn't grow that much in value, even though I've been throwing a lot of money at it. The reason is value stocks in general have lagged tech or growth names this year, especially in the latter part of this year. And so what I would say, and what that implies right now, it's interesting, a lot of the core stocks that I love so much, like PepsiCo, they're actually trading at more attractive valuations now than they were back in July. Now, they're trading heavier, higher than they were about a month ago, but still, I would say, I don't want to slow down too much because there still is some value out there. These stocks still are trading at somewhat reasonable valuations as compared to where they were before. And so it's good to be a value investor right now. This is the spring analogy I like to use so much, that they're kind of being compressed now. But eventually value stocks will be back in favor. But honestly, I don't care if they're not. I'm buying for the cash flow alone. Anyway, that was the other mistake there. Mistake 3 is that so many investors get scared in a down market. You just have to train yourself. I've had to train myself over the years to get excited by lower prices, as I'm excited right now that value has been lagging growth. Mistake number 4, let's check that one out. As you can see on the screen in front of you right now, mistake number 4 that dividend investors make is, I kind of already did this one, but it's thinking that it's all about stock picking. There is so much more to this game than stock picking. It's all about time in the market. It's about capital deployed. It's about being frugal, scrappy, living a thug life investor lifestyle. I don't need to go into that point too much more because I have included it throughout the presentation today, but I want to kind of reframe the discussion here on this channel and in this community that it's just not about stock picking. I'm going to share later some thoughts on stock picking. It's important, but it is only a small piece of the pie. And as investors, we can get so much further along taking even a simplistic stock picking strategy, such as just picking an ETF, in my opinion, like SCHD, but then focusing the lion's share of one's time on being disciplined, on buying the dips, on reinvesting dividends, on earning more money, on being entrepreneurial, bringing in more sources of income to grow the pie bigger. And so don't forget, it's not just about stock picking. And so mistake number 5 that dividend investors make, as you can see on the screen in front of you right now, the mistake that I want to close on today is listening to the media. I'm going to tell you, I hope this is self-evident for folks tuning in today, but boy, the mainstream media especially is, in my opinion, not worth listening to. And so I try not to subscribe to someone else's agenda. I try to follow my own agenda. Oftentimes I like to do the opposite of what mainstream media is saying. And so I have the Starbucks example on here. Mainstream media would lead you to believe nothing was going to recover way back in the day during the pandemic, especially financial mainstream media, but of course it did. But I want to share something else actually. Mainstream media would lead you to believe that big oil would have no future, that everything is going to go electric, that there will be no more big oil, and that it will fail. I don't want to go into that point in too much depth in the video today, and I believe that new green technologies have a very promising place in society, but I just don't think they're going to completely take out big oil. I think big oil, for many decades upon decades to come, I believe has a promising future. And so that's another narrative from the media that I think it's just important. If investors just follow the media, I don't think it's a solution for success. I think if investors listen to the media but form their own opinions on things and strive to be contrarian, strive to be a little bit of a thug, if you will, to think differently about things, I think that's where success can be found with dividend stock investing and investing overall. So those are the 5 mistakes to avoid. I also want to close out in the video today just with a fun kind of a few more slides, if you will. And so first and foremost, if you're new to this channel, to PPC Ian, I encourage you to subscribe, but I also want to share with all of you, why am I doing what I do here? I am doing this because I want you all at home to succeed. This is just one channel on YouTube that talks about a very niche topic, which is dividend stock investing. It's one form of passive income. It is not the only way to succeed as investing, but I believe that dividend stock investing should have a place, or should at least be considered in any well-rounded portfolio. So if you're new here, I hope you're enjoying the video today, and I invite you, as we head into 2024, to subscribe to this channel, to check out a lot of the video history that I have here. You can see how I've evolved as an investor over time, how this is a journey that never ends, how this is a journey that keeps evolving, and what I've learned over the years as a dividend investor. These days my portfolio has grown to a good size position, a good size amount. It's doing really well for me. I'm cash flowing quite nicely, and it is helping me on a month-to-month basis pay for certain things. And I'm trying to reinvest still. I shared this with my corner patrons on my recent portfolio update. I think right now I'm reinvesting roughly 45% of the dividends that come in, if not more, because I selectively reinvest some of the others. But over time, I'm not going to do that. I'm going to use more and more dividends to fund my lifestyle and my family's lifestyle, which will be great. It'll allow me to work a little less and enjoy life, travel, all that good stuff even more. So I want to share a few more things with all of you in the video today. As you can see on the screen in front of you right now, I want to share about dividend growth stock selection. And so how do I select dividend stocks? Well, that's the topic for many videos, many hundreds of videos, if you will. I've got them here on the channel. But one great place where you could start for 2024, if you're looking for just some great stocks, is the Dividend Aristocrats Index. These are the S&P 500 members that have increased their dividends for 25 years or more. Some of my favorite stocks are in the index: Johnson & Johnson, Pepsi, Procter & Gamble, Realty Income. This, again, I just want to share with you that stock selection gets a lot of attention, but it is just one piece of the puzzle. And so I want to close out today with my philosophy on dividend stock investing. As you can see on the screen in front of you right now, I've shared 5 mistakes that are great mistakes to avoid. But let's look at this from a different angle. What are some of the best practices that I use as a dividend stock investor? Well, I like to buy quality. I like to buy value. I like to buy quality when it's on sale, if you will. There's still some quality on sale now, as I mentioned, at least compared to July, but it's not as much on sale as it was a month ago. I like to buy growing yields, so I have a yield on cost, stocks that increase the dividend over time. I like to dollar cost average regularly. I'm always buying, although I buy heavier when stocks are on sale. I like to hold forever. I never like to sell. Sometimes I do sell. Usually, if I am selling, or almost always if I'm selling, it's to raise capital for a higher and better use. Although I'm really trying to avoid that going forward. I hope never again. And that's an important point, by the way. It's to have some excess cash on the sidelines for other purchases so that one does not have to tap into the dividend portfolio for large purchases. I like to reinvest dividends as much as possible. I try to delay gratification as much as possible. I'm using some of them, but I'm reinvesting 45+% right now. Eventually, my game plan is to live off of dividends. Everyone, I hope you enjoyed the video today. And before I go, in terms of a full disclosure, I own the stocks, many of them mentioned today. In terms of full disclosure, I am long Johnson & Johnson, ticker J&J, PepsiCo, ticker PEP. I'm also long Procter & Gamble, ticker PG, Realty Income as well, ticker O, the monthly dividend company. I am also long Hawaiian Electric, HE, Southern Company, SO. I am long General Mills, GIS, ABBV, ABBV. I'm also long Starbucks, SBUX, Utz Brands Inc., UTZ, SCHD. I'm also long the Home Depot, ticker HD. I own those stocks in my personal dividend stock portfolio. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market, please consult your licensed financial advisor first. It's possible to lose money in the stock market. I'm just sharing my journey with all of my successes and all of the challenges I've faced as well. I love you all. I wish you all an amazing holiday season. I look forward to seeing you in the comments below, and I'll see you in the next dividend stock investing video.